This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Trucking fleets in China are embracing cleaner-burning liquefied natural gas, LNG, for fuel, a trend neighboring India wants to emulate, accelerating a decline in diesel demand and rattling suppliers to the world's biggest oil importer. The rise of LNG trucks in China comes on top of world-leading electric vehicle, EV, adoption there and a prolonged economic slowdown, dampening demand in what for decades has been the main driver in oil consumption growth, with crude imports down 2.8% so far this year, weakening global prices. In September, the Organization of Petroleum Exporting Countries warned that LNG truck penetration will weigh on China's future fuel demand.
Oil prices fell on Wednesday after industry data showed U.S. crude inventories swelled more than expected, though futures were still up about 2% this week as traders factored in continuing conflict in the Middle East. Brent crude futures dropped $1.14, or 1.5%, to $74.90 a barrel by 12:55 GMT. U.S. West Texas Intermediate crude futures shed $1.10, or 1.53%, to $70.64. Oil had settled higher in the previous two sessions, pairing last week's losses of more than 7%. Those declines stemmed from worries about Chinese demand and some easing concerns around Middle East oil supply being disrupted, but investor sentiment appeared to reverse at the start of this week.
Moving on to the top news in the energy sector.
Economic growth in Saudi Arabia will accelerate next year thanks to higher oil output after 2 years of modest performance, according to a Reuters poll of economists, who also forecast robust growth for other Gulf Cooperation Council, GCC, states. The Organization of the Petroleum Exporting Countries and Allies led by Russia, known as OPEC+, has been curbing oil output since late 2022 but is expected to increase production in December, likely boosting revenues for the 6 GCC countries. Crude oil prices are expected to remain broadly weak and average $76.75 per barrel next year, up from around $74.08 currently, according to a separate Reuters poll.
India's annual diesel consumption is expected to rise by 3% to 4% in the current fiscal year to March 31st, said V. Satish Kumar, chairman of Indian Oil Corp., IOC. India's annual diesel demand in April to September, half of this fiscal year, rose 1% to 44.4 million tons, according to government data, even though heavy rains curtailed the movement of trucks. There will be a pickup in diesel consumption from October as rains have stopped and crop harvesting has begun, V. Satish Kumar told reporters on the sidelines of an event organized by the World Biogas Association. Next, we have the top news in metal markets. Aluminium prices rose to their highest in almost 20 days on Wednesday as news of alumina shortages triggered systematic buying from funds. 3-month aluminium on the London Metal Exchange rose 0.5% to $2,646 a metric ton in official rings after touching its highest since October 3 at $2,684. Alumina's sharp rally onshore and particularly since early September has shifted the narrative on aluminium, said Alistair Monroe, senior metals strategist at brokerage Morex. Prices of alumina, the main ingredient for making primary aluminium, have rallied 17% in China this month due to upstream disruptions in Australia and Guinea.
Iron ore futures extended losses to a second session on Wednesday, as a weaker global steel market outlook and softer forecasts for China's economic recovery overshadowed the top consumer's latest raft of stimulus measures. The most traded January iron ore contract on China's Dalian Commodity Exchange ended morning trade 1.91% lower at 746 yuan, $104.60, a metric ton. The benchmark November iron ore on the Singapore Exchange was 2.0% lower at $98.06 a ton, as of 07:02 GMT.
We will now look at the top news in the agricultural sector.
India has removed the floor price for the export of non-basmati white rice, the government said in an official order on Wednesday, to help farmers and exporters sell various grades of rice on the world market. Buoyed by forecasts of higher rice output, farmers and rice exporters recently urged the government to remove the floor price for non-basmati white rice exports that was imposed partly to ensure security of supply. Last month, India gave the go-ahead for exports of non-basmati white rice to resume. But New Delhi set a floor price for non-basmati white rice exports at $490 a metric ton.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.